It was a particularly noteworthy day for energy stocks today, not just because they did well, but because they did well while the price of oil was down, at least for the morning. And then later in the day, it started to turn up just slightly, nothing crazy going on in the price of oil, but many energy stocks were up 2-3%. Basically, every energy stock on the market was up at least a healthy and relatively whopping 1%. Now, the point relative to oil is crucial because these stocks historically, for the most part, depending on which part of the oil complex you go to, but all of them are average out broadly correlated to the price of oil. However, since June 4th, we have seen this disparity change. And I had previously attributed this June 4th date to the beginning of the fears of Delta and the Delta variant, where we saw a divergence between energy stocks and tech stocks. However, Tom Lee of Fundstrat, in his first word report this morning, pointed out, and he might have said this in a different report, but today I just noticed it very strongly, that on June 3rd, that was the beginning of the UK uptick in cases. Long story short with that, Delta is overplayed, and if we are following the same path that the UK has seen, which, first of all, removed lockdowns as cases continue to rise, there's a possibility, if I'm remembering correctly, that we are 12 days away from a peak in cases. Now, we should expect, as you have seen the graphs look, we should expect that to be exponential. However, let's stick to the guns and stick to the fundamentals, because even today it looks like that's winning. We're seeing cases begin the start of that dangerous upward tick, yet energy stocks were up. Okay? It's a good thing to see. Now, OIH, SLB, we'll stick with OIH because these are the numbers I remember off the top of my head. OIH on that June 4th date peaked at a little over $240 a share. The price of oil then was around $69 a barrel. OIH today, closed the market on Friday around $191. Today it's at $196. Price of energy is now $72 a barrel. Had been at $77 a barrel just a week and a half, 2 weeks ago. So there's at least that $40 to $50 movement in that stock, which is about 20%, plus, $3 per barrel of oil. And I doubt the price of oil is going to remain flat. I bet it's going to push up as the US continues to reopen in full force, as the UK reopens in full force, as India, the world's third largest energy consumer, reopens in full force, and as the rest of the world reopens in full force. So we're expecting the price of energy to get to higher than 77. And that's good for energy stocks, which will correlate with the price of energy, most likely. And if they do, have a whole lot of room to catch up, just judging on the previous high, not judging on their lagging since the overall coronavirus pandemic. That's where you see significant divergence between OIH and the price of oil. At some point, I will get into editing these videos so I can just attach that here. Not going to do it now. I'm going to do it once I get my Series 65 and things get a little more official over here on this channel. As for broader market stuff, we are following Paul Tudor Jones for the most part, not 100%. I'd say about 80% though, in the all-in inflation trade. Now, energy, yes, inflation corollary, right? It's a commodity, trades relative to the dollar. However, it also has supply-demand dynamic stuff, which I think we've covered. We've covered the case for energy. I've talked about Mosaic a lot in the past, and on this topic of inflation, I want to talk about it again. So if you look at all inflationary instances throughout history, German, Weimar Republic, hyperinflation, etc. The areas of the economy that are most resistant, whether it be inflation or stagflation, are farms and agricultural products. Everyone's got to eat. Everyone's got to eat their corn, whatever. Demand doesn't change. People will scramble to get the food they need to get. Mosaic makes the fertilizer for all of these companies. So that product is going to be in need. And if it weren't an inflationary environment, that stock would still be very well priced. If you needed somewhere to park cash and you wanted an object that would return capital, or at least made money and profited, maybe not have the biggest dividend, unfortunately, but at least made money in the object, Mosaic would be that for normal times. However, it's likely inflation is just beginning and going to pick up and continue and grow, and possibly there's another big infrastructure deal. We'll see what happens, but Mosaic, definitely a good buy. Farms, if you find a farm that you like, good buy. My idea here is look for inflation corollary things, and I really like farms in this environment. I still like gold. Real estate I have liked for a while, and my biggest position was previously Starwood Property Trust, but I took that off about a week or two ago on fears and uncertainty around interest rates. I also expect interest rates to begin to tick up, and real estate typically doesn't like that. The market has been very hot overall. Cap rates, so the return to investors is relatively low. STWD has a decent 7% dividend, down from what was over a 10% dividend in January. However, 7% is good for the market, for the industry. Like a lot of apartment complexes, other types of real estate are in 2 and 3% cap rates. I would rather own ExxonMobil. I would rather own Energy Transfer. I'd rather own Mosaic, even though the dividend is slightly below that. So there are other options. Gold, still like silver, metals. So sticking with the inflation trade, the other 20%, because I did say that's 80%, I'm still having explosive growth. A lot of people like FANG and note the market underperformance year to date so far as being a reason for it to be bullish the rest of the year, in addition to fantastic earnings and expected earnings growth. I just think that is so well understood and so well priced in, considering Apple, fantastic company, obviously, we all love it, has doubled its multiple since before the pandemic. So I'm tired of that trade. Had it at the bottom of the pandemic. I guess I sold it too early, but I sold it for growthier stuff, things that I think are real growth, because I don't think that stuff is real growth. Earnings growth, yes, is there. So who am I gonna say? In my opinion, when I say growth, I mean like venture capital level kind of growth. I don't know any VCs buying up Amazon these days. They did at some point, probably. But I'm looking at CRISPR stuff. Smile Direct Club is a stock I like. Disclosures, all that. Not trying to get a case here, but it's a good stock. It's a good company and a product. I really like the product. And the stock has done nothing except come down. It's like 60 to 70% off its IPO price. And in my opinion, it's cheap. Getting 200 mil of revenue, and that's growing fast. So that's my opinion on that stock. We'll see what happens with the market. And until next time, peace out.